So finally, we have some downside in the market. And the good thing is it's not just in the stock market. This sell-off was spread across different markets. You find it in crypto, equities, even crude oil sold off. Well, not really sold off, but was down by 4%. So let's get straight into price action. I'm going to start with Bitcoin. Bitcoin is so disappointing, and the reason it's disappointing is because Bitcoin is now correlated with the S&P 500. You would expect Bitcoin to be a hedge. Well, I'm not really surprised because back in March, during that sell-off, Bitcoin actually sold off more than gold during this period here. So it's not very surprising to see Bitcoin once again selling off with the stock market. But that's not really what it should do. It means you cannot use Bitcoin as a hedge. It just doesn't work. Bitcoin has become just another financial instrument in the global market. Anyway, so price has taken out this support here. So this channel is no longer valid. That support has failed. So I'm going to hide it. So price is now at 10,298. So the next support level is somewhere here. Well, we are currently sitting at support. So this is currently a support zone. So that first support at 10,900 has failed. Price, if you look closely, you'll see that price is below the Ichimoku cloud. I'm going to drag this slightly to the left so you can see this. Right, so this is price here, and this is where the Ichimoku cloud ends. So price is below that cloud. And as a trend follower, once price is below the Ichimoku cloud, there is now a bearish bias. So Bitcoin is in bearish territory using this model, the Ichimoku cloud model. Also, the RSI has fallen below 40. RSI currently sits at 36. So that's not very good. Bitcoin is in bearish territory. That's what that means. If I move this back, yes, somewhere here, my current thesis is Bitcoin is moving down. It's bearish. It's below the cloud. RSI is below 40. Okay, that's the thesis. But what is the alternative thesis? The alternative thesis is price, this whole area here forms a very major strong support zone. That area also coincides with this value area here. That's where most of the buying and selling has taken place at this price point. It's actually a range. It's from 10,000 to 9,000. That whole area is going to form a very strong support. And that's also where the 200-day moving average is. So the alternative thesis is, although Bitcoin is bearish now, there could be a bounce here taking price back up. So as a swing trader who is monitoring the trend, this is my first level. We're currently at that level, 10,300. Now, if that level fails, price falls into the zone. The final level I'm looking at is somewhere here, 8,600. If price takes out this support, then there's trouble. Anywhere down here is a big problem. So main thesis, price keeps going down. It falls in here. This is a buy zone. But if it falls below 8,000, 1,600, then that's trouble for Bitcoin. That's the way I'm seeing it. Okay, let me get rid of all these lines. That's the way I'm seeing it, but right now I'm not too worried. I see this as a buy zone, waiting for the bounce. I want to look at the US dollar. Why? Because the US dollar is looking very interesting now. Now what I'm seeing here, price is consolidating. So from here, there was a sell-off and then a bit of consolidation and then continuation of the trend. And now we have this consolidation. So what's going to happen next? Nobody knows. But what I'm seeing here is I'm seeing price is making a lower low and the RSI is making higher highs. And it's not just once, it's 3 times now. So this is the first higher high, second, third. So that's not just one divergence, but it's like a triple divergence. Divergences usually work at tops and bottoms. So this is looking like the US dollar wants to begin an uptrend. And if you now put in the fundamental backdrop, the EU, that is Germany, which Germany is a major export nation, they're becoming very worried about the strength of the euro. So could this be the point where the euro begins to fall? And since I think about 50% of the DXY is just a euro, this could be the point where the DXY begins to turn back upwards. It's very possible. I'm still very reluctant to buy here. And the reason for that is if I stick this DXY in my trend model, let me look for a trend model. I have 2 models. I use the Ichimoku cloud as one model, and right now price is below that cloud. This is cloud here, the red part. This is where price is. DXY is currently sitting at 92.97, and that is several points below the cloud. So from here down to here is about 1%, 1.6%. That's a lot for DXY. We're below the cloud, but I need to check my RSI model. I have 2 models. So I'm going to check with the RSI model. I'm going to switch this, move this here. Daily trend. So this is a chart of the DXY. Stock chart calls it USD for some reason. I don't know why. But this is the DXY. It's currently under that cloud. But if I use my RSI model, this is my RSI model here, price is still below this double line. This is a trend following model using the RSI. As long as price is below the double line, the asset is in bearish territory and there should be no buying taking place. But once price crosses above this double line, then buying can take place. So my guess is by the time we're currently in a channel here, so by the time price or the DXY rises and breaks out of this channel, that will be the first signal. That's signal number 1. I still think it will be below the double line at that point. But once it breaks into and above the cloud, that's signal number 2. The next thing to follow is price breaking above, this 5-day moving average breaking above this double line. That will be signal number 3. that's the time to go long. Some people are more aggressive. For aggressive traders, they might be comfortable with going long once price breaks out of this channel. But I want to play it safe. So breakout above the channel is signal number 1. Breakout above the cloud, signal number 2. And 5-day moving average above the double line is signal number 3. So that's what I'm looking at. That's the alternative thesis. But the main thesis is the US dollar continues downwards. It's very similar to this pattern here. A downtrend, consolidation, breakdown. So this is a downtrend, consolidation, breakdown. But I have to be mindful of what's happening in the macro space. Fundamentals are looking like it's about to turn around. I can also use that RSI model for Bitcoin. Let me see what it looks like. I'm just going to put in BTC USD here. Okay, let's see what it looks like for Bitcoin. So this is Bitcoin here. Bitcoin has, I need to get rid of these lines. Go away. Okay, here we are. Now, this is interesting. With Bitcoin, price has fallen below the cloud. So this is the cloud. This is price. So using my Ichimoku model, Bitcoin is in bearish territory. But if I look at my RSI model, my trend following model using the RSI, price is still above the double line. So it's not bearish here using this model. Now what that means is I can feel safe if I start buying here at this support here, because this is the major support here. If I start buying here expecting a bounce, I can still feel safe because that's in line with my process until I see this 5-day moving average breaking below this double line. Then it's no longer safe to buy. That's why I have two trend following models. Anyway, enough of that. Moving on to the next asset, which is gold. Now, gold is an interesting one because while the stock market is selling off, Bitcoin, which is supposed to be a store of value, a hedge, is also selling off with the stock market. Commodities are selling off. Gold is holding support. This is that range we've been in since July, and price is still within that channel. So what does that mean? It means gold still has, I'm using GLD for gold here. GLD is at 170, 181, around 180. So this means there's a lot of momentum building up. And if it's not breaking down now, I'm guessing that momentum is building up for an upside move. And if I look at the cloud, price is currently above the cloud, so it's still in bullish territory. The RSI is still above 40. So gold remains in an uptrend. So my main thesis is it's still going up. Continues to the upside. Now the alternative thesis is that gold breaks down, the support here fails. And if that happens, the next resistance level is here, 170. If 170 doesn't hold, the next support is somewhere here, this range here. This is that consolidation back in April. So within this zone, this is a zone. I drag this all the way here. Right. this zone here. That's where the value area is. That's where the 200-day moving average is going to meet that support zone. And that's where we have this consolidation. Now, if the price of GLD breaks below that zone, then GLD is in trouble. Then I will have to defer to this model. But right now, I think GLD on that model will still be above this double line. So no need to use that model. So that's GLD. What's also interesting with GLD is if I go to gold miners, GDX, still the same pattern. Price is within that channel. So while the stock market is selling off, gold stocks are holding support. They're holding firm. They're not breaking below this support. And this is Friday's candle. This is Thursday's candle. So that entire sell-off we had in the market, this is all it did in gold mines. So there is some sort of internal strength there, which will result in momentum to the upside. So when the market sells off, the stocks that sell off the least will usually be the leaders when the market uptrend resumes. So this is a very good ETF to watch. It's not just GDX. I think GDXJ as well. Yep. SLV. Let me see what silver looks like. Yeah. Gold, silver, gold miners. SILJ. I don't think this is on eToro. SILJ is also holding support. So it's looking good for gold and precious metals. Next one is SPY. Right. A lot of people had massive drawdowns between Thursday and Friday. So that's most people, not everybody, but most people experience that. So this uptrend line, well, I was expecting to see a pullback at that uptrend line, but price broke above that line, so that line is useless now. Get rid of that line. Right, now I can see the SPY clearly. So I'm going to draw a line here. This is where I was expecting to see a pullback. There, I was expecting to see a double top, and there was some consolidation for a few days, and then there was a breakout to the upside. So that support, no, it was resistance at that point. So we had this top here and this consolidation here. That formed a resistance area. Now price broke above, and during the sell-off, price is bouncing off that same zone. So resistance has become support. Now the SPY is still above the cloud, so it's still bullish. RSI is still above 40. It's currently 53, so that's still bullish. So my thesis here is the SPY is still in an uptrend. Now I don't know what's going to happen next week. The sell-off might continue, but as long as price remains above the cloud and RSI is above 40, it's still in an uptrend. Now what happens if this support doesn't hold? The next support zone is somewhere here. I'll say here. This is SPY, so that's 323. That's my next level that I'm watching, and this extends all the way to last year. So it's not just a minor support, it's actually a major support, because there is a consolidation zone here. I have that channel somewhere here, not this one, this one. So there's a bit of consolidation here that makes it a strong support zone. So I'm going to turn that off. Right, Okay, what if that doesn't hold? If that doesn't hold, the next level is here. This is another zone or another support or resistance. If you look here, this is resistance, retest, and then breakout. So that's a resistance area, and that became support. Bounce, retest, and breakout. So that's the next level. This is the alternative thesis now. If this support doesn't hold, price will come down here. I'll be watching this level. If that level doesn't hold, then this is my worst case scenario. At this point, price will be below the cloud. That means the market is in trouble. That means there's something bigger at play, and probably won't be buying the dip there. If I try to see where the value area is, yeah, this is where the value area is, right there. So this is a major support area. That's where the 200-day moving average is. So I'm expecting a bounce somewhere here if this level doesn't hold. If we break below this, I hope to have some cash left, because that's going to be really bad. Okay, that's all for price action. Now let me check market breadth to see just exactly what's going on. Now this sell-off could have easily been, well, I don't want to say predicted, but you could have seen signs of something going on from the market breadth. So right now we're having this sell-off, and if I look at the cumulative advanced decline, what it shows me is, I'm gonna need to do some annotation here. Okay, in the blue line I have my large caps. So large caps have been advancing since that bottom in March, and there is a swing high here, and then there was a low formed. It's a higher low, and then there was more advancement, forming a higher high here. So large caps are doing fine until Thursday. For mid caps, this is that swing high in the advancements, and then from the lower low, but it has failed to capture that high. So what it has done is it has formed a lower high. So that's the first sign that, okay, the market is moving upwards, large caps are leading, but mid caps are suffering. And then if I look at small caps, this is that swing high as advances, and then there's a lower low here, and since then the cumulative advanced decline line for small caps has not been able to capture this high, has formed a lower high. So there's a divergence here, there's a divergence here. This is not a divergence, but the market kept going upwards. So there was a divergence between price and the cumulative advanced decline. So that was the sign that something wasn't right with the market, and that was why I was 50% in cash. So now we have that pullback in the market, and the large caps have pulled back, mid caps have pulled back, small caps have also pulled back. I need to use another breadth measure to try to see what is taking place. So for that, I will go to the percentage of stocks above the 200-day moving average. Now if I use this, this is showing something slightly different from cumulative advanced decline line. This is the New York Stock Exchange in purple. 54% of stocks listed on that exchange are still above their 200-day moving average. That's kind of good. Any value above, any percentage above 50 is quite okay. But that value, that percentage is higher than last week. So what's going on? If there's a sell-off, shouldn't there be more stocks below their 200-day moving average? Well, I cannot explain that. I don't know what's going on. Now, if I look at the Nasdaq exchange, 51% of stocks are above their 200-day moving average. That's less than last week. Is it last week? No, I think this is daily. Yeah, it's daily. Yeah, end of day. Okay, so this is Friday, this is Thursday. So what's the trend? It's the trend I really want to see here. Let me check the trend. Okay, I'm going to draw a line. So what's the trend here? The trend is pretty much flat for the New York Stock Exchange. For the Nasdaq, that trend is downwards. For the S&P 500, 63% of stocks are above their 200-day moving average. That is very good. In a bull market, you want to see more than 50% of stocks above their 200-day moving average. And the trend for the S&P 500 large caps is flat. It's not increasing, it's not decreasing. For mid caps, the percentage is 55. And that trend, I would say, is also flat. For small caps, 50. Trend is, I would say, flat. So what's really going on here? Using this breadth measure, I would say there's nothing to worry about. The market still looks healthy. Now, what can be responsible for that sell-off? It's probably those large cap tech stocks. That's what I'm suspecting. Large cap tech stocks. Apple, Google, Microsoft, Netflix, Tesla, all those tech stocks. So they're probably the ones that are pulling the market downwards because they are selling off. Mid caps look healthy. Small caps look like they're doing fine. And I can actually check that by looking at their charts. So this is the S&P 500 SPY. Look at this. Take this away, drag this here. Okay, this is the SPY. Look at that sell-off. That Thursday's candle is massive, big red candle. Friday, well, there was a little bit of a pushback, but it's also a massive candle. Now, if I check Nasdaq 100, this is worse. This actually began on Wednesday. Wednesday, that's a red candle. I think that's what do you call that candle? Shooting star or hanging man, one of the two. Thursday, massive candle, almost a full body candle. Friday, so this is a massive sell-off here. Now, if I check mid caps, IJH, what do I see? Not much of a sell-off. In fact, it's almost flat. So it's just it's like a consolidation basically. Nothing much is really taking place there. What if I check small caps? IJR. Not a lot. It's not much of a sell-off. What about Russell 2000 IWM? See, not much. So that event on Thursday and Friday is mostly large cap tech stocks selling off. So the market is still very healthy until it's not healthy, and that's going by the 200 percentage of stocks above their 200-day moving average. For small caps, mid caps, large caps, Nasdaq exchange, New York Stock Exchange, they're all above 50 or at 50. That's pretty good. Another breadth measure is to check the new highs and new lows that are being formed. And if I use that, in the New York Stock Exchange, there are 11 stocks making new 52-week highs despite this sell-off. Okay? That's important because when I look at the NASDAQ, there are 50. Is it? No, hold on. Is that new high? Okay, this is new highs minus new lows. So that's 11 more stocks making new 52-week highs than stocks making new 52-week lows. I think the number of stocks making 52-week lows are 0, so that's 11. For NASDAQ, it's 56 stocks making new 52-week lows. I'll say that again. So for the New York Stock Exchange, 11 stocks making new 52-week highs. For NASDAQ, 56 stocks making new 52-week lows. So you can see that contrast. That sell-off is mostly in tech, because NASDAQ is the exchange where most tech stocks are listed. Well, not really tech stocks, but non-financial stocks. Now, if I look into the large caps, mid caps, and small caps, what do I see? I see in the large caps, 2 stocks formed new 52-week highs. 2 stocks. No stock formed a 52-week low. In the mid caps, 2 stocks formed new highs. 1 stock formed a new low. And in the small caps, 4 stocks formed new highs. 3 stocks formed new lows. Now this is giving me some deep insight into what's going on. So what can I draw from this? I'm actually going to use this information. Is very useful for picking stocks. So what this is saying is, at a time when the market is selling off, and let me see Apple. This is Apple. Look at Apple selling off. Facebook. That. Amazon. Kobe. That. So at a time when stocks are selling off, the market is selling off, Bitcoin is selling off, gold is holding support, some stocks in the market are forming new highs. Isn't that kind of interesting? So 2 stocks formed new high in large caps, 2 stocks formed new highs in mid caps, 4 stocks formed new high in small caps. I want to know these stocks. I want to find out which stocks are making new highs at a time like this. That's very important. Like, how can you be forming new highs when everybody is selling off? Or, okay, everybody's not selling off, but the large cap tech stocks are selling off. The market is selling off. So I'm going to use those stocks I'm going to pick those stocks as my stock picks for this week. So I'm going to find out what are that's 2, 4, 8. What are the 8 stocks that are forming new highs at a time like this? So that takes me to stock picks for this week. And how do I find that out? I'm going to scan. I'm going to use this code. So I know they are stocks because I'm only interested in stocks, not ETFs. So my type is going to be equal to stock. And I'm going to change this because I want to scan large caps, mid caps, and small caps. So I'm going to change that to group is SP 500, or it's going to copy this. I think that's faster. or group is SP 400. So SP 400 is mid caps, or group is SP 600. Okay, so this will make the scan engine scan for stocks within the SP 500 large caps, or the SP 400 mid caps, or the SP 600 small caps. And what is it scanning for? It's going to scan for stocks in which today's close, well, that's actually Friday's close, Friday being, or today being Friday, today's close is greater than yesterday's daily close for the past 253 days. So that's what gives me my 52 weeks. That's a year. 52 weeks make 1 year. So these are trading days. So that's how I define my 52 weeks. And I'm gonna take this one out. I don't need this. I don't need this. I need this code. And I'm gonna rank them by scooter. So check my syntax. Syntax is correct. Okay, I'm gonna scan and I want to find out these 8 stocks. 2 in large caps, 2 in mid caps, 4 in small caps. So I'll run the scan. And here they are. Tupperware brand Corp. That's consumer discretionary. That's the sector. Industry is durable household products. Corcept Therapeutics, healthcare, pharmaceuticals. Brown Forman Corporation, consumer staples. Okay, it's a distiller. Fiesta Restaurant Group. That sounds terrible. Restaurant and bars. Darling Ingredients, Archer Daniels, Midlands, Kosar, and Lancaster. There are lots of consumer staples here. That kind of makes sense. You know, when the market is selling off, people still need to buy their staples. They need to buy food. They need to buy medicine. Okay, that's healthcare. They need to buy things that they cannot do without. So it kind of makes sense. So this is small cap, 1, 2. It actually doesn't tally with what I have on that. What I have here. This says 4 small caps, but I am seeing 2 small caps, and I'm seeing 1, 2, 3, 4. Well, I don't care about that. All right, I found my stocks. I'm gonna dump them into this chart list, and these are the stocks. So what I'm gonna do now is I'm gonna view them here in an RRG, so I can see right away. Let me get rid of this tail. I need 3 weeks, so I can see right away that this stock TUP is the best performer in terms of momentum and relative strength. Before I get too excited, let me check if these stocks are on eToro. So Tupperware brand, TUP. TUP. Oh, doesn't exist on eToro. This is the problem with eToro. There are lots of stocks you cannot find on eToro. It's sad, but eToro is still the best broker. So get rid of this, because it's not on eToro. Darling Ingredients, DAR. Okay, I have that. Next one, Archer Daniels Midlands. DM. Okay, I have that. Fiesta Restaurant Group, FRGI. FRGI, not an eToro. See, that's a big problem with eToro. Acosa, ACA. Oh, doesn't exist on eToro. Get rid of this. Brown Forman Corporation. How do you type this in? BF/B? No, BF, I think. BF. Like Brown. Brown. No, that's not it. That's in London. Doesn't exist on eToro. Get rid of this. Corcept Therapeutics. CORT. CORT. Not eToro. Lancaster Colony. LANC. LANC. No, this is in London. All right. So out of all the stocks, there are only two on eToro. Darling Ingredients and Archer Daniels. And they both look good. I'm going to max this out. So I can see straight away that DAR is the best performer between these two. It has the highest relative strength, it's closest to the right, and the highest momentum is closest to the top. Now I want to visualize how they have rotated. Okay, leading, loss of momentum, loss of relative strength. Okay, leading again. That's pretty straightforward, clockwise. Yeah. But what I can see is DAR is more volatile because it has a longer tail. See, long tail, long. And all during that period, ADM maintains a very short tail. It's long here, but it's consistently short. So what that means is ADM is less volatile compared to DAR. And right now the tail is so short that could be, well, it's not really signs of a consolidation, but it's just signs of consistency. So what I'm going to do now is, well, I have only two stocks, so I'm going to take a closer look at these stocks. Well, good news is I found the 8 stocks that are making new highs. Now I'm going to check their relative strength. ADR. What is it? ADM. Archer Daniel Midlands. Okay, I'm gonna use this format, relative strength. Okay, now this doesn't look bad. Looks like a good stock. Why do I say that? Because I can see prices in an uptrend. So the market is selling off and this stock is in an uptrend. Isn't that crazy? And if I compare the industry, the stocks industry is also, well, it has been in an uptrend for a while. Still in an uptrend though, but that's currently trending downwards. Not trending downwards. Overall trend is up. Now, how is ADM performing relative to its industry? It is outperforming. That's good. How is the industry performing relative to the SPY? Well, underperforming, but it looks like it's beginning to outperform. That's worth noting. How is ADM performing relative to the SPY? It underperformed for a while, but right now looks like an outperformer. So that looks like a good stock to me. Let me check the price action. ADM. It's always important to check the price action. So this is what ADM looks like. See, this is what I'm saying. So while the stock market is selling off, this stock just formed a new high. It's a new 52-week high. Look at this. This is the low in March, bottom, higher high, higher low. No. That's not correct. So this is the bottom. This is a high. This is a higher low, higher high, higher low, higher high, higher low, and higher high, higher low. Who knows? But it looks very good. It's looking good. Yeah, I like it. You see, this high that it just formed, this current price is higher than the close over the past 52 weeks. Yep. Forming new highs during the market sell-off. You just have to like that. So I'm gonna add this to my portfolio. Well, this is my virtual portfolio. That's not real money. That's not real money. But sometimes, well, most times, the stocks I add here eventually go into my main portfolio. So you can add this. That's been added. Now what's even more exciting is DAR looks better than ADM. So let me check DAR's relative strength. So here we are. Get rid of these lines. So DRL is in an uptrend. Well, since the bottom, it's been in an uptrend. There was a period of consolidation here, but it's beginning to break out. It looks like it's breaking out basically. That's what it looks like. Let me scroll up. So that to me looks like consolidation and then breakout. That's what I see there. Now the industry is outperforming, uptrend, and DAR has been outperforming its industry. There was a brief period of underperformance, but now it's looking to outperform again. That industry sucks because that industry is underperforming the SPY. But that's about to change. DAR has been outperforming the SPY, but it's had a bad spell here, and it now looks to be outperforming. Now I have to check the price action. DAR. Okay, look at this guy. That looks nice. The overall trend is up. I like that. I like that. This stock just formed. Is that an all-time high? Crazy. You see? This is crazy. This stock just formed an all-time high in the midst of a sell-off. Crazy stock. Crazy stock. All-time high in the midst of a sell-off. You have to love this. You have to love this. So this is, where's February? This is February 19. So this is the start of, let's move down. Where is it again? This is, yeah, I'm gonna move here. So this is the start of the sell-off in February. Right there. So the market sells off, bottoms on March 23rd. But this stock, it bottoms here. And since then, it's been high, low, higher high, higher low, higher high, higher low, higher high, higher low. And then at this point, what it does is, that's the flagpole. This is the flag. It forms a bull flag and it breaks out. Now, what is it doing? This is the flagpole again. It's forming, that's formed the flag, and it's breaking out to the upside. So this crazy stock formed the bull flag, and in the midst of the market sell-off, it's breaking out to the upside, forming new all-time highs. What is its name again? Darling Ingredients, consumer staples. So I have to include that here. DAR. It's not just forming new highs, but it's actually breaking out of a bull flag. That's a stock that I can buy right now. And what I need to do is I need to check to see what the stock looks good. What about the company? Does the company look good? So I go to Coifin, DAR. That's what this company looks like. Because a lot of people cannot tell the difference between a company and the company's stock. I want to see the difference. Let me check the snapshot. What does it do? Darling Ingredients develops, produces, and sells natural ingredients from edible and inedible bionutrients. The company operates through 3 segments: feed ingredients, food ingredients, and fuel ingredients. It offers ingredients and customized specialty solutions for customers in the pharmaceutical, food, pet food, feed, industrial fuel, bioenergy, and fertilizer industries. The company collects and transforms various animal byproduct streams into usable and specialty ingredients such as collagen, edible fats, feed-grade fats, animal proteins and meals, plasma, pet food. Okay. All right. Looks like they're doing good business. Okay, let me see earnings per share estimates. I'm not really into all this. It's currently trading 13 times earnings. So that's not, well, I'm guessing, I'm not so good in this part, but I'm guessing that's not too high. 13 times earnings should not be too high, because if I go to Microsoft is trading at 37 times earnings. So 13 times earnings should be okay. What about let me see. Pick a random stock. Pick a random stock. Tesla. Oh, no data. Thank you. Amazon. Amazon is trading 126 times earnings. Anyway, whatever that means. Earnings estimates 34. Revenue and growth. Okay, looks like they have good revenues. Looks flat. Compound annual growth rate doesn't look good, but that's growth. That's talking about growth rate. Rate of growth. Whatever that means, I don't know. Revenue and net income. Okay, I like this one. Revenue this is the past 10 years. Looks, I would say, consistent. Yeah. They're doing good business. Net income is on the increase. So they're doing well. How about gross profit? See that? I like that. Debt. Lots of debt in 2014. Huge increase in the amount of debt, and it's been on a decline since then. Short interest, very low, 2.1%. What's the price target by the analysts? Wow, you see, Wall Street loves this company. Current price is 34. The average price target by Wall Street analysts is 39. So, what do we have here? We have a good company and a good stock. What's not to like? So, I'm going to add that to my portfolio. ADM and DAR are my stock picks, and I think I might actually put one of these, or maybe both of them, in my real portfolio. So that's it for this week. I'll see you next week.